Welcome to the MTA Podcast Series, a weekly audio cast featuring interviews with recognized industry professionals. And your host, Ed Carlson.
Tuesday, March 2nd, 2010. Charts are all about reading psychology and smelling raw emotion. Do not forget this. Do not think that you can move into or out of any financial instrument without causing ripples or tidal waves at times. Everything you think, do, and feel makes the market. After all, any market is the sum total of our actions, hopes, and fears. The name technical analysis sounds very scientific and rational. It isn't, nor are the markets we endeavor to follow. Today's guest is Nicole Elliott, a graduate of the London School of Economics and a member of the Society of Technical Analysts. Nicole has worked in the City of London for 27 years, trading in sales and as an analyst within the treasury departments of major international banks. Technical analysis is always the backbone of her methodology. She is Mizuho Corporate Bank's senior analyst in London and covers the foreign exchange, interest rate, commodity markets, and equity indices. Nicole Elliott, welcome to the program.
Lovely to be here.
Wonderful. It must be about time for you to head home from work.
Yes, in fact, I've stayed back specially so that I can do this interview, which I was sort of very glad to be asked to do. But yes, I tend to be an early bird here in our dealing room, partly because it's a Japanese bank, and so it's good to come in early and we catch Tokyo and Singapore and our Australian offices. But also because I work very much for our dealers. This is the key of my role is to increase profitability here at the bank. I have to be in before them, preparing all my reports so that they're on my dealer's desk. The first sort of foreign exchange reports are on their desk at 7:15 in the morning, London time. So I get in very early indeed, but then I get to scurry out earlier than all of them as well. So that's quite nice.
Well, thank you for hanging around. We appreciate that. And we're going to get into a little bit more about what your typical day looks like in a moment. But we normally start these podcasts with a little bit of personal history about our guests. For example, I would think that admittance to the London School of Economics is quite an honor. You must have been an exceptional student. Tell us about your career path to Mizuho.
Well, I've been at Mizuho for quite some time. In fact, it's the longest I've worked anywhere, and I really enjoy my work here. I work in a very, very grown-up sort of dealing room with people who know what they're doing and why, both personally and professionally. And I'm allowed complete free rein, which is perfect for me. That suits me down to a T. I actually studied social psychology at the London School of Economics. And I'm finding this is becoming more and more sort of discussed as economists have sort of lost face so badly over the last 10 years or so. And we've got all these new people who are suddenly deciding to call things behavioral finance. And actually, they've just picked up a couple of textbooks on social psychology and tried to work it into their studies. But it's great for me. It really, really sort of, for me, meshes with my technical analysis perfectly. And I've always used the two of them together. So
let's. How did you make the transition? I mean, you finally graduated with what degree from LSE? Economics, I take it.
No, social psychology.
You
science.
Finished. Okay.
Yes, I did. I graduated from the LSE with a Bachelor of Science, and decided that if I wanted to go into analysis or anything like that, it would be another 7 years of studying, and I just didn't have the patience. Nor I don't think I'm that academic really. So I left there in 1980 when Mrs. Thatcher came to power, and there was massive unemployment here, and it was really, really hard to get work. And I applied for I don't know how many jobs, and eventually in desperation sent my CV off to international banks because I speak quite a few languages, thinking, well, they've got money, maybe they'll hire me. And it was completely by accident that I got into A, banking, and B, technical analysis. And it was a time when interest rate futures had just started in Chicago, and they were opening up a new department here in London to trade these, who were also coming to London. And they were brilliant. I had such a short interview. All I said is, I know what a gold future is. And he said, right, you're hired because you know more than me. And it was all on-the-job training. And my two wonderful, clever bosses said, Nicole, everybody in Chicago looks at charts. You're going to be our chartist, girlie.
Wow.
Off you go. We've signed you up for some courses and things like that. More importantly, in those days, hardly anybody here in banking was using technical analysis, but they were on the stock exchange. So they called in an awful lot of favors, particularly with our gilt and money market brokers who used to be on the floor of the stock exchange. And they sent me over to all of these for 2 or 3 weeks at a time to learn how to keep charts on, well, it was on the fixed income markets there. I did the gilt market, really, because that was more relevant to our work. And I just loved it. I just immediately, I knew, it just made sense to me. Everything I was learning made absolute perfect sense, and I could sort of see it. And one of my greatest inspirations was a 2 or 3 day course by David Fuller, who's just inspired me ever since. And again, it's this idea of looking not at numbers, but you're looking at patterns. It's a kind of art form. It's a bit like music. You can read it. It's another language, and it just sang to me. I just instinctively grasped it at once, and I've done it ever since and enjoyed it too.
That's a lovely way to put it. Sounds like you were on the Earn As You Learn program. Rather than having to sit down and plow through a number of books, you were just there learning it one day at a time as you did it.
Yes, I mean, I'm always learning today. I haven't given up. I do also read books. I'm a very avid reader of textbooks to try to keep up to date and learn what other people are, doing new techniques, new ideas. I never give up. I just love it. So, yes, it's on the job and I'm being paid for it. I did sit the diploma, by the way, with much trepidation because I wasn't expected to do this at the beginning. But Mizuho, after hiring me, said, we notice you don't have the Society of Technical Analysts diploma, and we're going to insist on that. And I was nearly sick. My knees went to jelly, and I thought, oh my God, what if I fail?
Now, what diploma is this again?
This is the diploma organised by our UK Society of Technical Analysts, which means that you are a member of the society and you are fully qualified to carry out this profession.
And what's it called?
Oh, I don't know. I forgot.
Okay, moving right along.
I did it a while ago now.
Okay, I understand. All right.
It's a kind of basic level. I didn't go for the higher level because, as I say, I'm not terribly academic.
Okay. Let's go back. I cut you off a little bit ago. What does your typical day look like? Obviously, you told us you get in very early. Kind of take it from there and give us just a minute or so on that, would you?
Sure. I'm in the office punctually at 6 a.m. And I have my graphics packages and all the rest of it, and my news and my business TV and radio and all the things sort of going. And I spent the first sort of 20 minutes flipping through hundreds and hundreds of charts, very, very quickly indeed. Speed is of the essence. I do them every day in the same order. So I can work really quickly, and I have candles because these also are for speed. It's so much quicker to see, the differences, whether it was a significant day or a rubbishy day or what's going on and any turns and things like that. And I flip through, and it's deliberately, I do them on purpose very, very quickly, because by doing it like that, it's almost like flipping through a telephone directory or cartoon comic strip or something. You immediately see which is significant and what is irrelevant, and then I focus more on those. I have a regular set of reports that I have to do, as I say, for 7:15, and then the pace goes down and I stop and I have breakfast and read a newspaper and things like that. And then for the rest of the day, it's a series of other longer-term reports, particularly concentrating on interest rates because we are, after all, a bank here. and other currencies, the minor currencies, because I work for the foreign exchange desk. So that is my bread and butter. But we have a commodities desk here. We don't do equities here because that's our fixed income security side, which is completely separate. They keep us very, very separate indeed. But I do look at stock indices because they are relevant to the other ones to see how they're going to fit in. And so bit by bit, I do that. I also get a lot of requests from our corporate customers, particularly for hedging purposes and funding purposes. Very, very interesting for them to try to work out, whether, if you're a car manufacturer or something like that, at what level to pitch your vehicles, in what countries, when to hedge your money that you're going to repatriate, things like that. That's very interesting work, and it tends to be much more long-term. Often I'd be asked for views out to 5 years or something like that for their funding. I'm very reluctant to do that. I'm usually quite happy to go out to about 2 years if the picture is very clear. But beyond that, I'm not sure that my way of looking at things is valid, really.
All right. We're going to continue with Nicole Elliott in a moment, but first a reminder that on next week's program, we'll have from CNBC's Fast Money, John Najarian. Nicole Elliott, we started the podcast with a couple of your quotes that really struck a chord with me, and it may be that our listeners have already forgotten them because at first glance they don't really ring, but when you go back and think about them for a moment, they certainly rung with me. I'd like to talk about some of these, dig into these a little bit more. Let's start with this one. Do not think that you can move into or out of any financial instrument without causing ripples or tidal waves at times. Now, this sounds a lot like, what's the metaphor? The butterfly flapping its wings in the Amazon rainforest causes tornadoes in the Midwest or something like that. Can you expand on this comment for us?
Yes, it is partly to do with that butterfly theory, but in fact it's far, far simpler in that the individual investor often will have an on-off switch. I'm invested or I'm not. But the reality is, by not investing, he is affecting the very instrument that he thinks he's not affecting. And as bankers, we see this much more. The fact that we, decide not to lend money to somebody has an immediate impact, i.e. the no has as much of an impact as the yay. Likewise, you may think you're not invested, but you have a home that's priced in dollars. You have an income that whatever might be in another currency. All of these things will have an impact whether you do something or not, i.e. you may get richer or you may get poorer by doing nothing. So there's an opportunity cost of not doing anything, as there is an opportunity potential profit or loss by choosing to invest. That's really my point. And just like by choosing not to invest, say, in gold, you will have an indirect, if small, impact on the value of gold. You will, just by not doing something. And that's my sort of point. Also, when to hold, when to get out, when to exit from something you have invested in will have an impact. That's really my point there.
All right. Another quote. The name technical analysis sounds very scientific and rational. It isn't. This sounds like perhaps you have no use for the quants and their work.
No, I wouldn't say that. It's just that when I started, we used to call it charting. And then I don't know why this technical analysis sort of thing crept in. Also, I think it's confusing, not so much now, but particularly when the telecom business was expanding so strongly, and then it turned into telcos, we call them here, and these are people who analyze the telephone companies and the media messaging systems. I mean, they're doing something quite different, but the two sometimes here in the UK do get confused. And it was more that aspect of it. I personally see this very much as an art, not a science. As I say, I've likened it to singing or music, being able to read it. Very artistic, very design-led, which I am myself, looking for these tiny nuances in the patterns and the shapes and the day-to-day movement of the market. And I consider that an art, not a science, and it's something that comes with practice and a bit of innate skill as well, just the kind of, a bit of chutzpah and things like that. That's what you need to get you there.
Well, in our last 6 minutes, I'm going to need to combine a couple questions, so I'm just going to throw this all out to you and see how you do. I wanted to talk about what's in your toolbox. That is, what are your favorite indicators? Now, anybody that's looked at your work recognizes immediately that candlesticks are a big part of that. You've already mentioned it. The Japanese cloud charts, or Ichimoku Kinkyo Ho, that also is a big part of what you do. I want to talk about those, and particularly cloud charts in some depth. But before you get into that, could you tell us what other indicators or favorites of yours that you like to use, and then perhaps somehow move into why cloud charts? How and why were you attracted to them?
Yeah, I keep things really, really simple, Ed, because what I'm looking for is fear and greed. So I tend not to use any kind of mathematics which are using the actual price. I stick to price itself. So I hardly use moving averages and things like that, except the cloud ones. The clouds I've learnt here from my Japanese colleagues. Again, when I started at Mizuho, I was horrified in that every other Japanese dealer was using charts that I'd never, ever seen before in my life. And I was hired as the full-time technical analyst who was supposed to know everything, and I didn't even know what they were looking at. Right. Another sort of whoops, weak knee moment, what am I going to do? So I thought, we'll learn it. And with my Japanese colleagues, they have taught me everything I know. I've bought the Japanese book. They've helped me translate the bits of it that I needed to find out. And that's how I got started, and I've been doing that now for 13 years. And I love it. It really does work. And again, it's although it's mathematics-based, it does seem to have this medium-term trend-like quality to it. The other favorites, of course, are Fibonacci retracements and projections. Trend lines and the patterns themselves. Every little pattern, whether it's, a one-day candle to, head and shoulders and things like that. The Japanese ones have some great names like Abandoned Baby and Hanging Man. They're absolutely fabulous. So there are a few more of those as well as our Western ones that are worth knowing. And that's it, really. That's all I use.
Is that right? Where would you suggest our listeners go if they want to learn more about cloud charts?
Well, I've written a book. It's the only one in English. So
funny I mentioned that.
It's very kind of you, Ed. The original one was written in the 60s. It is available. It's out of print, but it is available. It costs an absolute fortune. I think it's something like 10,000 or 30,000 yen. And then there's the other one, the classic Japanese one. Hosoda wrote that one, that's available, but it's in Japanese. And as far as I know, these are the only 3 textbooks available on the subject. Okay. But I must say, it is widely used in Japan. I mean, please believe me when I say that every other dealer is looking at this type of chart. To how deep he goes in the analysis varies tremendously, whereas some of them use it just as a kind of memory aid, as a sort of rough, just to help you remember where you were a month ago or something like that, whereas others take it very, very deeply indeed, and as well as the clouds, they're looking at patterns, at day counts, and wave counts. So it gets a lot more complicated than the cloud, and it's up to the individual to decide whether he wants to go into so much detail or just stick to the basics, which is what I can tell you most Japanese dealers stick to. They stick to the basics.
Mm-hmm. It's interesting to hear you say that this is what the Japanese, and I think you said what other foreigners are watching. Last week we interviewed Katie Stockton from MKM Partners, and she too is a big fan of cloud charts. And she made the point that if only to know what foreigners or traders overseas are doing and looking at, you need to follow the cloud charts. Nicole, we are down to our last minute here. But I had one question left that I just have to ask. You wrote, Ichimoku Kinkyo Hyo's key concept, that's Japanese cloud charts, is that price and time are inextricably linked. Now that sounds an awful lot like GAN. Is that what you mean?
It is sort of like that, yes. It is that idea where you've got a sort of pace that is natural for that instrument, and that's where the price and time get linked. And then sometimes it gets ahead of itself, or then you have a bear market, but there is a kind of pace to the rate of change, and each instrument is slightly different, and that's what you're trying to gauge. That's really, and so it keeps you into the medium-term investment horizon.
Nicole Elliott, it's been lovely having you with us today. Before we conclude, is there anything else you'd like to mention?
Just keep on doing it and enjoy every day. It's great fun.
Oh, good advice. Well, that wraps up today's MTA podcast. From Seattle, I'm Ed Carlson. You can follow me at seattletechnicaladvisors.com or contact me at ed@seattletechnicaladvisors.com. Send us your comments and suggestions. Let's keep our stops tight. Good day.